This video is for real estate investors. This video is particularly if you are wanting to boost your credit score with a $10,000 no credit check trade line. So it's very important that you stick around, pay attention to this because this $10,000 trade line is the difference between you getting approved for a $3,500 credit card or a $35,000 credit card. So pay attention to the end. I'm going to tell you exactly why you need to make sure that if your credit is struggling or if you're struggling with any type of history problems, that you go ahead and get this taken care of. So if you have not already subscribed, make sure you go ahead and do that. If this is your second time or more back and you are not already subscribed, go ahead and click the button. Come on now. But let's jump into it. So the software I want to talk to you about today is Credit Strong, in particularly their Revolve account. Now, Credit Strong has a few different products, but what is Revolve by Credit Strong? Revolve is a credit builder account and it's offered by Credit Strong. And it's a division of Austin Capital Bank. Austin Capital Bank funds some of the major banks that we have across the US that handle lending. Now, what is Revolve by Credit Strong? Revolve is a credit builder account and is offered by Credit Strong. It's a division of Austin Capital Bank. Austin Capital Bank funds some of the major lenders across the US. Now, unlike traditional credit cards, Revolve combines a savings account with a credit builder loan to help you establish or improve your credit history while simultaneously building savings. When you open a Revolve account, Credit Strong reports your monthly payments to all three credit bureaus: Experian, TransUnion, and Equifax. Well, I'll take that back. It's not all three, it's the major three. So, Experian, TransUnion, and Equifax. Now, you might ask, why is this so important? There are two components of your credit report that build up the bulk of your score, and that's payment history, which takes up about 35% of your credit score, and utilization, which weighs in at about 40% of your credit score. That's a total of 65% of your overall credit score. So, when you're talking about 65% of your overall credit score being impacted by how much active credit you have, how much payment history you have, how much utilization you have, that's huge. Now, this is going to come in handy. Let's say you don't have the proper amount of payment history. And when you're going in for funding for real estate investors, you're going to want to make sure that you have at least 3 to 5 years of credit history already. If you don't have that 3 to 5 years of credit history already, you want to make sure you add something like Revolve to go ahead and make sure that that's strong. If you don't have that 3 to 5 years of credit history, there are some things that you could do, some other types of trade lines that you can add to make sure that you get that credit history. But this utilization is going to play a major part in this because let's say you have a $10,000 card already, but you've used up, let's say 7,000 of it. So, or even 5,000 of it, right? That utilization is still a little bit too high. So once you get this other $10,000 added to your credit report, you're now down to 25% utilization versus 50% utilization, which means you now qualify for funding. So that's a total of 65% of your overall score. Let's talk about how all of this works. Credit Strong Revolve, it's a secure revolving line of credit, and it's designed to lower your utilization and build your credit while you save. When you open a Revolve account, Austin Capital Bank is going to extend you a secure revolving line of credit at 0% utilization. This is going to increase your total available credit and lower your overall utilization. This is what I was talking about earlier. You can set an optional monthly payment at 0% interest to maximize the benefits of your Revolve account by adding usage and payment history to the line of credit, all while you build up your savings account. So when you're putting money into this every month, this ends up being your money. So making three consecutive payments on time will increase your total credit line. And I'm going to show you how that works a little bit later. And this is going to allow your Revolve account to reach its maximum funding. Credit Strong Revolve versus a regular secured credit card. A secured credit card can be a good way to build revolving credit. If you're having a hard time getting an unsecured card, then you'll need cash deposit to open up a secured card. So this means that you're going to need four or five, $600 at least to open up a secured card that's going to make a difference on your credit report. Your secured card works just like a regular credit card, meaning you pay high interest on the balances you carry and you need to manage your utilization so you don't hurt your credit score. So a lot of times these secured credit cards, we get in trouble because with secured credit cards where you have a lower credit limit, and you're spending a good chunk of that. So if you've only put $300 on there and you're spending more than $30 a month, then that means you're hurting your credit utilization. And remember, that credit utilization, that's 35% of your score. Credit Strong offers solutions to build installment and revolving credit without needing to put down a large deposit. And because Revolve can only be spent on your savings account, you can build payment history by saving, not spending. This is going to allow you to work on the other 30% of your credit. Your payment history, you're going to have some solid payment history on your credit profile. So, a secured card is going to make sure that, you got to put down that deposit. So a secure card, you're going to have a deposit, but if we go with the revolve account, you're not going to have to worry about making a large deposit, and you're not going to have to worry about your utilization being impacted. And you're not going to have to worry about your utilization being impacted. So let's take a look at the different plan options. So you have Revolve Basic, which is their base plan. That's $99 a year. And they're going to give you an initial credit limit of $1,000. Your maximum for the Revolve Basic is $2,500. So your credit limit bumps of $150. This happens in the increments of 3 on-time payments. This is just $10 when you're making these payments. So 100% of every monthly payment builds your savings at a 0% interest rate. And you're going to receive your FICO score monthly. Now, when you go to the Revolve Plus, this is a little bit of a better value. This is $199 per month. Your initial credit line is $2,500 of revolving credit. This is a max credit line of $5,000. So your credit limit bumps at $250 increments. So you're going to get a credit limit bump for every 3 on-time payments that you make of $20. This means that 100% of every monthly payment is building up your savings account. So you're going to receive your FICO score monthly. You're going to receive your FICO score factors monthly. This is going to be all your factors are all the things that impact you. And then you're going to receive your Experian credit report quarterly. Now, your Experian credit report is what a lot of lenders use, especially if they're lending large amounts. So this is a pretty, it's one of the most important credit bureaus to make sure that you always have in line. The Revolve Pro, this account is going to have the biggest impact on your credit. It is $249 a year. However, I'm going to be honest with you, $249 a year, you're not really missing that. And $249 a year in exchange for showing $10,000 line of credit on your credit report, that's not a bad exchange, especially when your credit limit starts at $5,000. So at the jump, your credit is going to improve by default because it's showing that you have a $5,000 credit limit on your actual report. The maximum credit limit is $10,000 for this account. The credit bump happens in $500 increments. And the only thing you have to do to get these credit bumps is you're going to make 3 on-time payments of $25. And 100% of every monthly payment, this is going to your savings account as well. So along with your FICO report and your factors report and your Experian report, you're going to get identity protection and credit monitoring. And this is going to include up to $1 million in identity theft insurance. Now, with these prices, I'm going to be honest with you, like these prices are less, than some of the credit monitoring services that are available. So if you already have a credit monitoring service, maybe decide to switch out and say, hey, you know what? Instead of paying $30, $40, $50 per month for credit monitoring, maybe you decide that you're going to get a Revolve account and really start saving that money and getting the good benefits that we're talking about here, especially this identity protection and the credit monitoring. Because while you're going through your funding sequences, you're going to need credit monitoring to keep an eye on what you have going on with your credit. So some key differences here, like I said, the Revolve Basic, the Plus, and the Pro. The difference is 1,000, 2,500, and 5,000. That's going to be the major differences there. And then also the major differences are when you're going to receive your Experian report. With the Revolve Basic, you're not going to get it. The Revolve Plus, you're going to get it quarterly. And the Revolve Pro, you're going to get this monthly. But you also want to make sure that you have access to identity theft and identity insurance. So all of those, they break down to pretty reasonable prices. I mean, the basic, it's only $8.25 per month. The plus is only $16.58 per month, but the pro is only $20.75 per month. Now, you throw $20 out of the window every single month, doing next to nothing, right? You may as well have this $20 exchange for $10,000 on your credit report. It makes sense. So, regardless of the plan you choose, the following core benefits are going to apply. Revolving credit. So, unlike traditional credit builder loans that report installment payments, the revolve plan is structured as a revolving credit line, which can positively impact your credit mix and utilization ratio, which is two key factors in your credit score. On-time payment incentives, on-time payment incentives. Each plan encourages good payment behaviors by tying credit limit increases to consecutive on-time payments. This means that they're going to reward you for doing well. But I'm going to answer some of the most common questions that people have. Is Credit Strong available in my state? Credit Strong accounts are available in most states, with the exception of Vermont and Wisconsin. So if you live in either Vermont or Wisconsin, you cannot participate with Credit Strong. What is required to open a Credit Strong account? So you're going to need to be 18 years old and a permanent U.S. resident with a physical U.S. address, no P.O. boxes, a valid Social Security number or individual taxpayer ID number, a checking account or debit card, a mobile phone number, and an email address. So don't forget, out of all those, Vermont, Wisconsin, you cannot participate in this. Revolve accounts are reported within 15 days of successfully making your subscription payment. So as soon as you start, you're going to be seeing the impacts from that credit 15 days into this thing. And then if you decide to close it, there's no early cancellation penalties or anything like that. Some of these credit builders do have penalties, but Revolve doesn't have a penalty, and you can just call their secure number here. Now, let's go over these requirements again because these are important. Must be at least 18 years old, be a permanent US resident and have a physical US address. So no PO boxes. Must not live in Vermont or Wisconsin. You got to have a valid Social Security number, an individual taxpayer number, and have a checking account or debit card. So here's the bigger picture of all of this. The Revolve product, it's unique because it merges the concept of a credit builder loan with the revolving nature of a credit card, but without all the risk of overspending. You're not using a physical card to swipe at stores. So here's the bigger picture. Why choose Credit Strong Revolve? The Credit Strong Revolve product, it's unique because it merges the concept of a credit builder loan with the revolving nature of a credit card, but without the risk of overspending. You're not using a physical card to swipe anywhere. Instead, you're making small monthly payments that simulates responsible revolving credit usage. So when someone pulls your credit report, they're going to see that you're actively making payments on a $10,000 loan. These payments are reported to credit bureaus. They're helping you establish payment history, grow your credit limit over time, and strengthen your overall credit profile. And because the full amount of your payment is set aside as a savings instead of going towards interest or fees, you're also building a small savings cushion. So instead of this money just going out of the door, you're kind of like putting it to the side. So if you need it later on, it's available to you. So if your goal is to build or rebuild your credit, avoid interest charges, see your credit score improve with responsible use, then Revolve plans, they can be strategic and disciplined ways to do so. But like I said, stick to the end. I want to give you my final thoughts. Credit Strong's Revolve products, like it stands out in the credit building space because they allow users to grow their credit responsibly without taking on debt. So whether you're looking to get your foot in the door with Revolve Basic, aim visibility and support with Revolve Plus, or even go all in with Revolve Pro's top tier tools and protections, each plan is a specific budget and a specific credit building goal. So each one of these is going to be able to offer you something different. And since all plan deposits your payments into a savings, no wasted money on interest. It's a dual win for you, your credit, and your wallet. So, but I mean, really, when you think about it, the revolve accounts versus secured accounts, think about it. Would you take $10,000 over a $10,000 loan account over your $200 secured account or your $500 secured account? Or your $1,000 secured account. All of that is going to make a difference. So check it out. Revolve. It's going to be under Credit Strong. And remember, like this is going to impact 65% of your credit score. So make sure you check it out. I appreciate you staying to the end of this video. If you have not done so already, make sure you go ahead and subscribe. I'll see you on the next one.